Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. We've got Greg Machinery, Pete Peterson on to talk about what's happening in the marketplace. This edition of the Moving Iron Podcast is brought to you by John Deere. Greg, how you doing this morning?
I'm doing well, Casey. How are you doing?
Doing good, man. Doing real good. It's got rid of the wind. We had a lot of crazy wind up here, and it's not uncommon, but now it's gone away, and we got some cold coming in. So you can always tell when there's a dramatic change coming into weather because there's typically wind that kind of brackets both sides of that weather change. So,
well, if you want to send that wind our way, it'll help push out this below zero. I think we're Tuesday or Wednesday. I think we're looking at a high of 7 below. So that's cold enough.
That's plenty cold. Yeah, you can keep that because that wind would blow it back down on us. So I'm gonna keep the wind down here. So
okay. I wish you luck.
Thanks. All right, man. Well, you've been tracking some stuff as far as kind of evolution a little bit of what we saw year over year of numbers in the marketplace on going to the auction market. So, Greg, as you're looking at that, talk a little bit about what your findings are.
Yeah, Casey, I just crunched some interesting numbers here. Getting ready to go up to Manitoba, Brandon, Manitoba, speak as we're recording. I'll be speaking tomorrow at the Manitoba Ag Days, a great event up there. And I knew I'd been up there twice, 10 years ago in 2016 and then in 2023. So I kind of got curious. I was like, okay, let's try to get in the headspace of what the used equipment market reality was 10 years ago when I went up there, January of 16. And then 3 years ago, January of 23. And of course, it's pretty stark. So as I was crunching that data to get up to date here, end of 25 into early 26, one of the interesting data points I'm focusing on is the volume of 0 to 3-year-old tractors, combines, planters, sprayers sold at auction. And of course, if we wind it back to 24, huge jump across the board in all those categories, as dealers were really trying to get ahead of it, had too much late model, particularly large late model inventory. So the auction market was just a wash in 0 to 3-year-old, tractors, combines, planters, and sprayers. And then last year in 25, big pullback. So the data I crunched, tractors, we saw a 51.2% drop in basically new to 3-year-old tractors sold at auction. And combines, exact same, 51.8% drop. Planters a little bit less, but still significant, 43.3% drop. Sprayers, 29.1% drop. So we saw much less of the really late model stuff at auction. But overall, I believe the last numbers I crunched, the raw number of machinery auctions in 2025, I think was up 4.5%. So to me, that basically spells in 24, pressure was on the dealer front to, again, try to get ahead of it as they're able. And 25, the bullseye shifted onto the farmer side. So we saw many more restructuring, downsizing sales, retirement sales. So yeah, just some interesting numbers. They get at the current trends from a different angle other than just the final auction sale price. And when I do have time to look at data on the sides of it, like you do with volume, dealer listings for sale, it's usually a jigsaw puzzle that fits really tightly. And, but again, huge drop last year in that late model stuff at auction.
Yep. And, it kind of correlates back to what you're talking about. You start looking at listings for sale out there. You look at the 1 and 2 year old stuff that's out there, that 1-year-old stuff, I'm talking 2025 model year stuff that's being listed right now. And you're talking about 24 stuff that's being listed out there. Comparatively, year over year, what those looked like is significantly different than what it looks like right now. It's drastically different what it looks like right now. And with what we saw, the action towards the end of the year, you're starting to see a lot of that stuff get cleaned up. I got to run the numbers here for the end of the month here coming up. I've got a presentation I'm giving to a group of bankers over in Springfield, Illinois. But it's one of those things where as you watch the dynamics play out, you're seeing a reshaping of the market, and more and more of that is going to continue, I think, to kind of grow and talk about. And like we've been talking about all through last year, as you watched how we started out in 25 and how we ended in 25, that market just kept getting more and more firm and more consistent pricing across the board as far as what you see auction values go. And that contributes back to that, the less machines you see going to auction, because as the auction market firms, the retail value of those things start to recalibrate themselves, as well as dealers go back through and reprice and do those kind of things. And independent jockeys and whatnot go back and reprice the marketplace and start looking at where's the market at now? What are people willing to pay for? And you can see that really start to pop up. And that, again, that really solidifies that marketplace and continues to add that, that support to the auction market as well as to that retail side.
Yeah, exactly, Casey. You're 100% correct. I know it was interesting as I got looking again, heading to Manitoba, thinking back 10 years ago when I was up there January of 16. I pulled up a chart from our Machine Repeat Used Values Index report, which is kind of my trying to, basically for the investment community, but obviously use it for the farm analogies too, farm audiences. But back then, when the downturn started, kind of mid 13, corn and beans fell basically, coming off the ethanol push. That took about 3 years where auction values dropped like a rock on big late model stuff, combines, sprayers, tractors, 24-row planters and up. And this time, combines took a couple of years, I thought, but this time, tractor market, fell like a rock in 24. And then just like you said, we hit 25 and we just kind of went, ugh, till November, December. Then we went, whoop, we started to go up again. So it's interesting for me to chew on, 10 years really isn't that long a time. 2016, but of course we live in a day and age when the pace of change is just breathtaking. And
Yep.
so, you look structurally what was different 10 years ago. There were way more dealers, of course.
Yep.
Dealers weren't able to do en masse what they did this time in 24 and just bite the bullet, get bloodied, but just move that stuff. And so again, to me, like we've talked about occasionally over the last 6 months to a year, the used space, whether you like it or not, is just way more efficient than it was a decade ago.
Yeah.
And I think that has big ramifications going forward. Just like you were hinting at, the dynamic is changing. And again, wherever you're at on this thing, lenders, investment community, farm side, dealer side, really got to absorb these changes and then as best we can try and extrapolate, like you'll be telling the lenders there in Springfield. You'll lay out all the answers for them on what's coming for 26, I'm sure. But it's way different than it used to be.
Well, yeah, I've talked a lot about this with guys I used to work with and guys I still keep in touch with and those kind of things. But the amount of information that was available 10 years ago, we thought was an exponential amount of information compared to what it was the previous 10 years. And now you start looking where things are at now, and it's the speed. It's almost like and I think this is across the board accurate, right? Whether you're talking trucks, semis, or farm equipment, I don't think it really matters. But as you're looking things across, as more and more information becomes available and the ease of which that information flows through the channels, I think it goes back to what we've talked a little bit here, as it either extrapolates the speed of which a downturn happens as fast, the speed of which a downturn happens, and then it also speeds up the recovery as part of that part too, because you go back to 2016, kind of at the end of the last real kind of downturn where things kind of normalized. Going into 2017, things kind of normalized out. There were still a lot of things that you had to go manually go look. If you wanted auction values, you go to Machine Repeat and look at auction values, but if you wanted to go see what, hardcore auction values were and where those were coming stacking in, like you had to physically go to like Big Iron and Steffes and Sullivan's and so on and so forth. And you had like six, my joke all the time is when I was using equipment guys, like if I had 10 screens, I'd be asking for 15 because it would be, you just had so much stuff that you had to keep track of, and you had a spreadsheet for this and a spreadsheet for that. Well, now that information is consolidated very well to where it's easier to find anyway. And then you throw AI into that mix and the ease of which that information comes through. you can kind of start seeing when those downturns are going to happen and what's going to cause them, right? And if you kind of know what's going to happen, you can kind of brace yourself to where it's a very quick, acute pain, but it's not going to linger, right? There's going to be you can take that hammer and get smacked on the head with it one time instead of getting beat over the head with it repeatedly for 2.5, 18 months, 2 years type of thing.
Right. Yeah, I remember, oh man, so I'm pushing 40 years doing this. I remember back in the day, Casey, when I would get auction price reports, I'd have to call out the auctioneers and I'd scribble them down on a sheet of paper. And we were, of course, there was no internet.
Right.
We were publishing our auction price books 4 times a year. So I'd get these reports on this sale today. I wouldn't have to type them into our system for 2.5 months because that was when the next book came out.
Yep.
I remember being very excited when like 90, 98, 99, when blogging kind of became a thing on the internet. So then when we would get a sale, like Sullivan's would have a sale, and I would get the prices right away, and then I would start to, talk about them. So it's, but yeah, everything is faster these days. Now I know, for example, tomorrow when I'm up in Manitoba, I'll have one eye on that big sale we talked about last week down in Arkansas, Pocahontas, Arkansas, by Kirk Witcher with Witcher Auctions. It's for hill farms, but really late model one owner stuff. That 23 model 470 quad track with 73 hours on it.
Mm-hmm.
I never used 24 model 550T Case IH air drill. So those are the kind of things hard cash wise.
Yep.
Whether you're a farmer or a dealer or a lender, gosh, those are data points, and they fill in the breadcrumb trail, and give us a feel here. Now the calendar's flipped. We've talked a lot about November, December was stronger for hard cash auction pricing. Early signs in January, there aren't as many sales, but the really nice sales we've seen have been, as I analyze the prices, have been just as solid as we saw back in December. So, we'll see here if that continues. But again, I think you're right. The speed of everything is entrusted information. It's just easier to get now. And hopefully we can get to a point when it doesn't overwhelm us and make us numb, but gives us actionable insight to free us up to tie that with what your gut and your head is saying. And one of the things I've been trying to do a lot, and I see you do it too, is take all this data we have and then try and triangulate it with, farmer sentiment or dealer sentiment, which is really important. And it's, I've always noticed a lag with the farmer sentiment to the auction pricing. So maybe it's just a human thing, but wherever I go covering sales, people tend to come up and say, "Oh, Pete, these sales are terrible, right?" And it's like, this past year, it's been, well, actually, no, these are pretty solid to better than expected numbers. But what that gets at is like my friend Brad Olstad with the Steffes Group. He had a great comment. I had a post the other day. January, you do kind of a lot of look backs. And I said the highest auction price last year in 25 on a planter. Steffes Group sold one last March, I think in Nehawka, Nebraska. The DB60 36 row 20 inch, I think. 24 model, I believe, went for $398,000. And I looked back 25 years, and the highest auction price was on a 1780 24 row 20 inch for, I think, $77,000. And Brad, who's been with Steffes forever and great guy, legend behind the mic, super sharp guy, he commented on the 398. And so when I post that and I say that's whatever, the highest auction price this year in a planter, maybe highest whenever, I'd have to check. But a lot of people pile on and they go, that's a terrible price. But what they're comparing to is that retail asking price. And Brad's point was that gap in that 25-year difference from 2000 to 2025, that gap is because of that price of new. It's just the ratios are the same, like you and I talk about, but that price was so high that it's just done some well, it just changes things, no doubt.
Yeah, and I think if you go back and look at where those things play out and how that whole thing works, is that you have to start looking at, and I just think this market, this is why I think the dynamics of the market are changing to what the new normal looks like. I mean, the new normal, there's always been a new normal that comes out of every downturn. And typically that new normal is a process associated with, hey, we're going to make sure that doesn't happen again, right? We're going to set ourselves up so we can go do this. This new normal that's coming through is not necessarily a process driven new normal. This is a market driven new normal that is, I can I afford to take $250,000 worth of depreciation in 1 year, right?
Right.
Because that again goes back to it. It's still the same 25, 30% depreciation that you've seen year over year, but it's just the numbers have gotten so big and so just astronomical that it feels like it's a horrible number. It really does. And same thing. I heard the same thing when it was 50 grand, right? Oh my God, how could we ever do that? Well, as these progressions that we see in the marketplace take place, it's going to change the way people buy and where they buy from and what that looks like and all the things associated with it. And it's just you're starting to see those changes right now. The conversations I'm having with my dealer buddies and stuff like that, the conversations I'm hearing from them is it's the way people want to buy is totally different, right? And we thought we were setting things up for the way people wanted to buy pre-COVID, but that's even changed it even to a whole nother quarter turn to something different than we even anticipated. So now you start looking at all of this stuff as it flows through, and it's just one change, little microscopic changes along the way, but it's morphed into a completely different animal than what we thought was going to
See, that gets really interesting, Casey, because, you're right. Our pace of change is just faster and faster. And, my dad taught me when I started 36 years ago I've mentioned it before, but his best piece of advice to me was, Greg, just keep your head on a swivel. So one thing I read this week up here in Minneapolis paper was interesting stat. We have a company here in Minnesota, now not related to farm equipment at all. It's a Sleep Number, make mattresses, right? These high-tech mattresses. My wife and I have had one for many years, and it's data. It's connected to the internet. You can adjust your sleep number. It gives you all this feedback, blah, 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 whatever. It's good. But their sales have fallen for 11 quarters in a row. Okay. And their majority shareholder is one of these hedge fund type deals. And of course, they're not happy. And they're like, what are we going to do about it?
Right.
So the CEO came out with an attack plan for 2026. And for the first time, they are coming out with a mattress like with no tech. It's got the same materials. They've always been like, oh, our materials are the best. I don't know mattresses. What I'm interested in is that's a pivot. That's listening to the change at back down to the customer level. People aren't buying our mattresses. Why are they not buying our mattresses? And the reasoning was they were positioned at the very top end of the price point. Now, the economy squeeze is what it is. The K-shaped economy, if you're at the top end, you got dough, you just keep buying those high-priced mattresses. But there's a lot of folks who are on the other half, and they're like, I can't afford a $9,900 mattress, and I ain't going to buy one that expensive. So then if you're Sleep Number, what do? Well, you've got choices to make. But I found it interesting that, to me, again, their head was on a swivel listening back to the customer, which I think it's always a good idea to listen to your customers. Yeah. And the groundswell we've talked about on the farming side is, again, this kind of a mindset shift in terms of the volume of equipment you have on the farm. Again, totally related to the cost of new, and we just can't swing that right now. So it's gone on long enough, and folks are just starting to chew. I think I heard you and Aaron talking about it. It's just, it's real. And so now, how will farmers carry forward with that mindset, or will it just kind of drift away? What will dealers do? What will manufacturers do or choose not to do? So to me, it's when change gets faster and condensed, there's really market share at play, I always think, in these periods of upheaval. Oh, yeah. And it's and people remember that one of my things I write about often, I come back to, is the theory of opposites. When everyone else is pulling back, man, that's when I'm going to get uber aggressive. Yeah. as I'm able. Now you have to have your powder dry to do that. But, on the dealer front, for example, I'm hearing dealers now as it's becoming more of a reality about the supply crunching in and how fast that changed from 24. Now, on the dealer side, who's going to be aggressive enough on the front to pay attention to what farmers are doing and maybe go proactively be an aggressive buyer on the auction market of that 3, 4, 5, 6-year-old stuff as it becomes available. I just said it's dropped 50% from 1 year ago, the number of it out at auction. And, if dealers are looking ahead, I think that's what I'd be doing, trying to be aggressive out there as a buyer on this stuff. Again, it's fascinating to study from whatever angle you're looking at it.
Typically, when you hit the bottom of a market like this, it's a great time to jump back in, and you can find some deals that they're going to, not necessarily saying that you're going to appreciate in value or whatever it might be, but a lot of that, when you're looking at the overall scheme of what's happening, you have to buy the things that are going to complement the existing inventory you already have, right? So that you can fill holes that will then create. I used to go buy stuff to create the opportunity the stuff that I did have in my inventory, create an opportunity to get it to move, right? And you just work your way through that. Those were all tools that you could use to help kind of right size your offering to your customers. I think the other thing too now is that, we've been saying it for 15 years, if not longer, but the internet makes the world a small place, and that town just keeps getting smaller and smaller and smaller, right? And while it keeps getting bigger, it keeps getting smaller, right? And that's the avenue of why so much information is out there now, and the ease of which you can find it. And I remember I sold a machine early in my career from Wichita, Kansas to a guy in South Central Florida. And I was like, man, that is a long ways to come get a piece of equipment.
Right.
And it was like, back then it was like, I don't know, it was $12,000, $10,000 trucking bill to get it down there.
Sure.
Which again, that was like astronomically out of, like, totally just out. I remember asking the guy, like, between Wichita, Kansas and South Central Florida, there's not another one of these machines out there. And he said, like, the reason why I wanted to get yours is because the information you had on it, the pictures, those kind of things like that, it was very easy for me to make a decision on this one comparatively to everything else around here. Okay, well, it makes sense. But at the end of the day, the idea that it was easier to shop for that piece of equipment, and that was almost 20 years ago. So now if you look at it from how easy that information is to get today, I mean, my goodness, if you're buying a pickup truck and you want to use Kelly Blue Book to figure out what it's worth, if you have the VIN number or the tag number, you can get kind of the specs of the machine or the truck, to really understand what it's worth and get a picture of it. And we're not that far away from that kind of stuff on the equipment side.
Right. Yeah. Don't you think too, Casey, coming through the pandemic and then 21 and 2, when the issue was, there just wasn't availability. So if you found what you wanted, you just kind of had to get it. Don't you think that on those transportation costs, that when that became kind of, well, I have to, it's in Kansas, I'm in Florida, whatever. That mindset kind of lingers with us once you get over that hurdle. Yeah. So now, folks, you can call our great friends at Valley Transportation, Brad Graff and their crew down there. They'll ship stuff all over the 48 states. And, I talked to Brad and, it's compared to 10, 15, 20 years ago, what you described as being like a holy smokes, or I'd be at an auction all those years ago, and the auctioneer would say, smart guys like Dan Sullivan, when it sells online, would go, oh my goodness, this planter is going to Wyoming. Mm-hmm. And you could hear the farmers at the crowd go, whoa, we're sitting here in southern Indiana and that thing's going to Wyoming. Now it happens every day. But again, things they change fast these days.
Yeah. You start looking at it as a percentage of the sale, right? Back then, that $10,000 back then was almost, it was 12, 15% of the value of the thing you bought. Today, that's not the case, right? That's at 1%, 2%. Right. 3% type of thing. So that like my grandpa always said, me sitting on the back of this horse is an afterthought. It's like I don't have to worry about it. It's already 1,200 pounds, right? So
I think you should write a book, Casey, on your grandpa's sayings. It's a number of them. You just dropped truth bombs on me on this Moving Iron podcast. I love it. It's we should ask our Machinery Pete audience sometime to send us your favorite grandma or grandpa saying. Maybe I'll do that today on Facebook, and I'll say that we talked and push people to Moving Iron. But no, I love it. But isn't it amazing though that like what I was talking about before, me, Mr. Smarty Pants, not a dealer here, but suggesting maybe dealers starting to go aggressively buy on the auction market to fill out their offering. Who would have thought we'd ever could have said something like that 18 months or 24 months ago?
Yeah. Yep.
And here we are. It's things are just light speed faster these days.
Yep. It's getting easier and easier to buy, and one thing too, it seems like every year, and it's not necessarily some of the best lenders out there in the world, but the access to capital is also changing the way
Right.
that people look and buy, stuff too. So that changes things too.
Now that'll be interesting when you're visiting, when you're talking to your lenders over there, give your presentation, but then, be a sponge and hear what they're thinking for 26 and 7. That access to capital. Sometimes these things, it was back like when interest rates were 0%, we kind of got used to that. And then, hopefully access to capital won't become an issue, a difficult issue, but, we get used to things as they are. And it's not necessarily a saying from one of my grandparents, but, up here in Minnesota, people like to say things are as they are until they aren't.
That's right. Yeah.
Okay, it's changed. You don't have to like it, but it's different. Let's go. So.
Yep. Yeah, I've adopted that saying throughout my life. It's all X until it's not. So, and then
and the bottom line, don't get cemented, which is kind of what you and I are just, gently prodding, advising, whether it's on the farmer side or the dealer side, and you just don't get cemented in your mindset. That was basically my dad's advice 36 years ago is, make yourself look sideways and backwards and just go, and then, you'll have things that will be useful. A lot of them aren't. Just let those go. But it's an amazing day and age we live in, isn't it?
Yep. Well, it's like I tell my kids, you got to be aware of your surroundings and know what's going on around you. If you don't, you're gonna get hurt. So. Good stuff. All right, Greg, good place to stop. Folks want to reach out to you, get more information about what you're doing, or have you come speak. What's the easy way? Just go to machinerypete.com or hook you up on your socials.
Yeah, just go to our website, folks, machinerypete.com, click the contact button. You can shoot a call in or an email to our office, or like Casey said, hit our Facebook page. Did get a couple requests on Facebook the other day. I try and catch up with those as quick as I can. Sometimes when I'm moving around the Facebook messages, it takes me a couple days to get to, but if you hit our office, that gets right to me. So, and I'll be out on the road a lot in February, so look forward to seeing people out at the farm shows and auctions, and it should be an interesting start to 26.
You're going to Commodity Classic, aren't you?
I will be in San Antonio. Yes, you're going to be down there?
I'll be there, so we can do this together sometime.
Do you have a favorite place on Riverwalk? That's the big question, Casey.
It's been a long time since I've been. Was in San Antonio last. I want to say I might have been in San Antonio before the Riverwalk was even there. That might have been how long ago it was.
Okay.
It's been a minute since I've been there. So.
I think the first time I was there was again. This gets off a little equipment, but I was there March of '97. So my business was 8 years old. One of my part-time jobs at that time, I was writing for the Rochester Post-Bulletin in the sports department. So I would mainly cover high school games and community college stuff, super fun. But Minnesota Gophers made the Final Four that year in San Antonio. So I talked there. See, now there's another technological difference. Casey, all these cell phones, but
yep.
I talked the sports department to let me cover those games to get to the Final Four. Boy, we had a lot of fun down at Riverwalk there, and that was back when our Gophers were pretty good in college basketball. Getting better now, but fun memories.
Yeah, that's a good time. Yeah, that stuff's a good time. But we'll have to rock around and record some stuff and see if we can't run into
Yeah.
people and give them shout outs. Well, Greg, appreciate you being on. We'll catch you again next week.
Sounds great, Casey. Have a good one.
All right, stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like Exact Apply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right, welcome back to Moving Iron Podcast Markets. I got Rich Possum back on to talk about what's happening in the overall economy. Rich, how you doing today?
Doing good. Thank you for having me again.
Love having you on, Rich. We've got a few things kind of going on. I want to pick your brain on something real quick. First, before we do that, talk a little bit about your podcast. There's a lot of good information that people need to hear.
Right. Go to criticalpointpod.com and you'll find some free stuff as well as some locked up stuff. I have a little membership, some that's just for the grain markets, some is more for stock market economy, and then there's actually a combined subscription where you can get both. And I give you little morning briefs throughout the week. I do a weekly update for people who are interested in lengthier moves or they don't see a whole lot going on. Then they can just watch that one weekly update. And it is video, so if you're busy in the tractor, truck, whatever, you can just listen to it and you'll have an understanding over time. But if you have that moment to look at those charts, you're going to see how well the signals are working of is the economy going up or down? Is the commodity price going up and down? Some price targets. And then I'd love to talk about the economy and some of the news and information going on there. And that's at criticalpointpod.com. And they can email me at criticalpointpod@gmail.com. That's a little different email. I've had it forever and I keep forgetting to put it out there. So give me an email. So
Right on. Okay. All right, let's talk a little bit about inflation right now. So inflation is so basically most of my adult life has been under the guides of a very steady economy. You coming out of 2000s, 2006. I mean, you had a rough patch there with the dot-com bubble stuff, those kind of things. But post-dot-com bubble to about 2006, it was a pretty steady economy, not a lot of crazy things happening. We had, September 11th happened, 2008, so on and so forth. And, then you see a huge reduction in overall interest rates and inflation and everything else kind of took off there. We see this inflation thing happening. Now, I can't tell you that I've followed this as closely as I followed over the last 4 or 5 years, but this particular moment in time, you start looking at all the Fed governors that are out there. There's many Fed governors that think inflation is under control as are scared to death that it's going to come rearing back. And there's like this pretty hard divide between should we be raising or should we be lowering? We do have a new Fed chair coming in. I'm not for sure when he starts, but he's coming in and obviously going to be a little more favorable to what Trump wants to see happen on that side of the coin. But when I see that many people that are pretty evenly divided, that there's a camp that says, "Hey, we're really, really good," and then there's inside that camp there's like we're good, but we're not really good. But on the other side, there's a bunch of them over there that are really concerned about seeing a huge explosion back into inflation as you roll through 26 into 27. So as you're looking at this inflationary issue that we see in front of us here, Rich, what are your thoughts and what camp are you in?
yeah, I'm favoring higher for 2026, but I'm thinking the faster pace increase may not show up the latter half of this year. So it might not cause too many problems to rise here in the next few months. And I can see why it might actually be more sideways, not really do much of anything for a while yet. But even though I realize most of us thought the tariffs were going to kick that in immediately, we could see over time, no, this is trickling through, this is going to take time. I'm not so sure we should give up on that. About 80% of the businesses who are paying tariffs, they're paying 80% of that tariff, 20% being passed on. So it's only a matter of time that I think they're going to have to do catch up because they bought ahead of Trump raising the tariffs. They built their inventories. Now they're running out of inventories. Now they got to buy that more expensive stuff. They're paying the tariffs. I think eventually they got to pass some of that tariffs on because business today is so addicted to making sure profits are already always up there. If they can't figure out how to build business and create more profit, if they can't lower input costs, then they just simply raise their prices. And it's amazing how well they get away with it. We're actually destroying some of these business cycles of how it's worked throughout the history of this country just because these businesses, for some reason, it's easy for them to just keep raising that price. We apparently haven't broke enough people here yet to really snap that around. So I think some of that tariff stuff is still coming in. I think as the economy picks up this year, and I think it will, that can also encourage them of saying maybe they can get a little extra. Whereas right at the moment they have been nervous of where they're going with all this Trump stuff. And you could just see the jobs were so bad last year as far as jobs creation. They were saying, even if they were saying they were pro-Trump and what the government's doing, they really weren't doing it on the business side, okay? They're saying one thing, doing something else. There are people thinking we'll get some more jobs this year, that they're calming down, saying they think they can live with this. But again, I think that's going to be allowing them to try to bump prices here, and that inflation's going to go higher. Now, how much higher, how well that works out for me, I don't know. But the model has performed well enough for decades here, and it's just saying we better consider a higher interest rate. So I agree with that side of the Fed. I understand what the other side of the Fed's looking at, because with this not so good job stuff, even poor, if it keeps trickling through, we could have some issues here. The economy is going to get weaker. And what the Fed is wrestling with, could they get stuck in a scenario when prices are going like that, inflation, but the economy is going like this, all right? And we can get into stagflation, a real messy time that's really going to create a lot of tension in our society. There's going to be more miserable people than what we have right now. Where do I think the Fed's going to err? I think they're probably going to, at the end of the month here, I think they're supposed to have another meeting. I think they probably won't raise or lower interest rates. I think they'll say, let's watch us a bit more. I think in May is when the new chairman takes over. And it might be that Powell would like to just kind of coast into that and get out and then let them do what they want. Already this morning, Trump has already shaken up the list of who he was probably going to pick. So now they're unsure once again who's he actually going to pick and how that's going to work. The Fed, after Trump come out on this putting a cap on interest rates there, the Fed you could see is even if they're on both sides, even politically, you could see they're going to be more together of making sure they don't lose their interdependence on from the Fed, okay, dependence from the Treasury and the rest of government. In other words, they want to be independent. So at least they're kind of in agreement, even the Republican kind of Fed people, where they might not go with Trump stuff, even if Trump puts a hardcore put his man in there. There's some discussion there. He might not accomplish much as you might think. That they want to be careful just how much they do in that Trump direction. So, yeah, that could turn out to be real interesting for the rest of this year on the Federal Reserve side. But right at the moment, I do think inflation is going to work higher, but I'm not convinced anybody's going to get too scared about it right now. I would watch the CPI goes above 3%. It was so interesting last year. I said, get me 3% or higher. We got an uptrend. Went right to 3%, 2 months. And then it's backed off. I'm willing to say maybe inflation can actually ease back next couple of months, but get it over 3%. I think we're on our way higher, and I think most of that will probably be late this year.
Okay. Hang on a second here.
By the way, on the recent inflation report, it was 2.7% CPI, and that was unchanged from the prior month, which is a bit puzzling because I looked at the subgroups. You can probably even find it on CNBC.com. They had a list of the subgroups in that inflation. Looked like to me like 86% of them were showing higher inflation. The remainder were showing lower, yet they still come up with an unchanged inflation. So don't quite get that. Okay. And it didn't look good on the sub side of that, and they even showed steak prices jumping 3.1%. Hamburger jumped like 0.2%, but there was a lot more on the increase than the other, and it could be a weighting thing there. But I'm going to stick with my idea. This ought to at least ease higher on the inflation side here.
Yeah. So are you talking like, is your thought process behind where this inflation is coming from? Is that because of like you talked about earlier, like the materials they purchased pre-tariff situation?
That could be some of that. Yeah. Yeah. Well, they had a definite cushion built. I'm surprised how well they built inventory. They were starting to build it, I think, immediately after the election and built it right in all the way to when he had his, I can't remember, the big tariff day there. Uh, and they were probably able to squeeze some a little after that. And once the tariffs hit, of course, then they were stuck of having to pay those higher prices, but they were working off inventories. You could see our imports actually dropped quickly, and then they came back some, and they were just burning off some of that. And I think that will partially explain why things were delayed. I mean, I think many of us in the markets and also an economist thought that inflation would jump, by summer at least of last year on into fall, and it only picked up some. All right, and I just don't think we've seen that full impact of this tariffs yet. And if they could draw it out, if these companies can be slow and just work that in, it may not turn out that big a deal. But if they get caught short where they, hey, got to pay full prices to get this stuff imported and they need it and the economy is there for them, I think they're just going to pass things on much faster than what they've been.
Yeah. So you talked about all the different stuff that you were looking at, the different categories and whatnot. I keep seeing these. Hamburger only went up 0.2%, and this, that, and another thing. It doesn't feel like it's 0.2% when I go get a hamburger.
That's always been the problem with these inflation numbers. Yeah. Yeah,
So,
you hear that from the economists even, they'll say, well, that's what it was, but yeah, my local store.
it's kind of
So,
like everybody hates Congress, but they love the congressman. You know what I mean? It's like
yeah, there's something lost there in translation. So,
yeah, I bought 3 sandwiches at a sandwich place the other day for me. My two sons went out and we had lunch together, and it was $60 to get 3 sandwiches. I mean, I was like, what the. Which, I don't eat. It catches you off guard because you're like, I can't believe I just spent $60 on a subpar sandwich. You know what I mean? Like, it's just, But anyway.
For the decade, we're up like 26, 28%, which really, it could be a lot worse than that when you look at the history of the U.S. back to 1800s. This is kind of the low side even. So there's more room there to really spike inflation unless we behave ourselves, and you've seen other decades where it went about this high and that was about it. But we're only about halfway through the decade, so this could get really interesting how expensive things get. I'm definitely not letting go of a 1970 scenario yet and question if it will happen, but the point is I have to keep it on the table. And in the 1970s, inflation shot up early in 1970s, stock market crashed 60%, inflation went down, stock market started back up. Late 1970s, it shot up again, okay? And the stock market was able to swallow that one. And that's why Paul Volcker had quite a tough time. He was wondering whether raising interest rates would it really kill that inflation. Well, he eventually did it, and it caused a recession, but I mean, it worked. But that's a messy way of doing it. I really hope younger generations here, especially working for the Fed, they can come up with something different than raising interest rates, because that just hurts the middle class and poor far more than the rich in order to turn that inflation around, when the inflation's also caused by the rich too. So it's need a little better system there. I prefer more of a taxation system, but that has to be tweaked as well.
Let's talk about, so on the same inflationary front, let's talk about affordability, what that looks like. Here the last week or so, Trump's talked a lot about capping, trying to figure out how to do executive orders, those kind of things, to cap interest rates on credit cards at 10%. And you've got these, BlackRock and companies like that are buying up apartment buildings and houses and those kind of things. You look at some builder reports that are out there, and it shows that their sentiment's not very strong right now. But on the industrial side, you see some strength on that. So I guess as you're looking at this whole, how much of my dollar do I get to keep at the end of the day? You start looking at this affordability thing. There's some pressure there. What feels good on one side always seems like there's a ripple on the backside, and I gotta believe that as much as I would love to have everything capped at 10%, that'd be awesome. There's got to be some ripples there on the backside of that is a juice worth the squeeze in some of these conversations, and I would love your opinion on that.
Yeah, I think we should do something like this. And credit cards, I've said it for many, many years. This is ridiculous. 24%. The other day, somebody with very good credit got a card and it said 36% or something like that. That's nuts, you know. And it really, you know, supposedly it's supposed to help from, you know, getting too carried away for people borrowing too much, this and that. I can't see it does anything. All right. So you know, I like to hear that, but I realize that is literally government interfering with business, which, of course, Republicans tell us they're not for that, but they're doing it. Okay, well, trying to do it. Immediately bankers come out. Oh, they're furious. Okay. And now that really woke up non-bankers. A lot of business people that have been for Trump, some called the ring kissers, they're suddenly waking up. Boy, you know, he's doing what we want, tearing down the government, changing his country, but he might come after us. Okay, tell us what to do, right? So
Yeah.
this is going to get fascinating this year on into to next year of how this all trickles out and comes through. I agree with the banks. Obviously, if they're going to cap it, there's some kind of a loss there, but I find it difficult. That's going to really wreck the credit card system. All right. I think they're just kind of overreacting to protect themselves. They're kind of stuck in the mud, don't want to change, things like that. I personally would like to see it actually work. Try something different there. And I don't know, is it going to go through or not? Because boy, the banks and Wall Street came right behind the Banker Street to try to back it up to fight Trump on that. But he's trying to at least put an image out there that he's trying to do something about affordability. You know, so and he's got a problem with this affordability. People are just talking more and more about it and saying this is getting more expensive, that's getting more expensive, this is getting more expensive, and even if they're getting pay raises, saying I can't keep up, you know. So he's trying his best to come up with some things. I'm a little concerned. A lot of this is just going to be band-aids and distractors and this and that. But he might actually hit on something that can work, even if it doesn't work that well. I think whoever comes after him might well say, well, at least we were kind of on a track here. I can even see Democrats saying, well, we're kind of on the track here. They'll modify it and change it. We're going to see lots of this kind of discussion of what is business really doing to the American people. It's no more about people are getting tired of just worshiping business, Casey. I mean, they woke up. They woke up that it's not just government can be your enemy, business can be your enemy too. So there'll be more of this kind of discussion. And but to me, the best I can tell for the monetary or banking system, that shouldn't hurt them at 10% cap, but they're sure going to holler about it. So they don't want to be told what to do either. That's pretty much a human characteristic, right?
Somebody wants to be told what to do, right? That's it.
Yep.
That's
Yep.
how it, you know.
Now,
Yep.
also on his idea of those large investors in homes, you know, many years ago, back in the great financial crisis, I thought that was a good idea. I thought I might have been the first to put that idea out. And then, boy, it was only a year later I learned, no, man, they've already been doing this. And it kind of helped us out all the way to mid 2010s. And they just kept on doing it, whereas I just wanted it a temporary thing to kind of support the economy, keep us from crashing and burning, help out people from losing their homes. Because what they were doing back then, at least, is they buy the home and then they rent it back to people and give them a chance to get caught up and eventually maybe sell it to them. But the problem is they just keep going and going and going, even though there's no crisis of that in that sense. And it has been shown to help increase prices of rents and the homes. All right, and so Trump again getting stuck in this affordability thing is just saying, well, that's one thing I could do to maybe ease that back. And how far that goes, I have no idea. I don't even know where it's at right now. But a way is a surprise to hear it. On the other way, I wasn't because I've been thinking all along, I'm not so sure I want those investors. And it was so messing around in homes. And it was so interesting that the leader of China come out and made a comment that he said investors should not be owning homes that are meant for people to live in. And I said, well, thank you. So maybe that'll raise some eyebrows a little, and maybe not. But anyways, it is. I'm wondering what will come next in just the next few weeks. Because I'll tell you what, late last week, this week, boy, the Trump people have been busy. There's all kinds of little things, some things most people haven't even heard of yet, and I still have to research on. They're scrambling. What can they do, at least on this affordability issue, ahead of the coming election?
Yeah. Okay. So now, one thing I love having you on here to talk about is the stuff that you track, and as you're looking at stuff track across your long term stuff that you look at from 1980 till today, what are you seeing that's different, and how do you see that playing out as we move forward through the rest of 26?
Yeah, it's interesting that there's a thing called the uncertainty index. Has to do with policies that are being created and what do people really think about it. And the chart I saw was only from 2006 to now, so I don't know if there's prior history, but it was record high. So it's just sending a message: the American people, business people, whoever's being polled, aren't pleased with how things are going in the country here, where we're going, all these policy changes and government change. How does that impact us in terms of our living standards as well as just doing business? But record high. So there's a lot of nervous, upset people. Other types of polling, such as are they just in favor of Trump or not? And man, it's some of this stuff is like 80% against. They just don't think the country is going in the right direction. But to get it more on the economy side, what I'd like to talk about is if we look from 1980s to date, and then we look from 1980s to prior, going back to 1950s, maybe World War II, maybe even the Great Depression, what we're finding is some interesting stuff that's coming out of people. I did this research all the way back 2000s, haven't really updated it, but so pleased to see people talking about it now, and they're getting really excited or upset about it. But what they're coming up with is that the GDP from, say, 1950s, 1980s was 4.1% per year. Pretty good economic growth. Then from 1980 to date, it's averaging about 2.1 or 2.8% per year. That's a big reduction. And every time I see this kind of stuff, I sit back and say, well, wait a minute. No, I voted for President Reagan. I voted for, hey, let's build up capitalism here. Let's do some business, man. And, and yet somehow we printed record sums of money, built a tremendous sized economy in record speed, made the rich a lot richer, bigger businesses even bigger and a lot richer. But somehow from 1980 to now, we really lost a lot of our GDP in terms of how fast the economy's growing. And so I thought, okay, seems like somebody should be upset about that. Well, what I've been talking about since early last year is the consumer sentiment did well in the 80s, 90s. People were saying, we can buy into this whole Reagan, more capitalism, more kind of stuff. We can do that. And they actually were even happy right up to about 1999. They were very happy under Clinton because Clinton was basically just doing what the Republicans wanted on the economy side and had a fantastic stock market, one of the best stock markets ever. But from 2000, it's like you just flip a switch and the consumer sentiment goes like this, all the way down to right now at Trump when it's at the bottom of the chart. Okay. So along the way, we had two Democrats at least, okay, along the way, yet it still slid anyways. So you kind of got to argue, apparently both sides didn't really do enough to make people happy. All right. And if you look at what's going on with that slower economy, it's a little more understandable why they weren't happy. Well, what's even worse is when you look at the pay, the percent pay as share of GDP. What are the workers making from our economy, GDP? It was really around 1950s all the way up to, let's see if I wrote that down, all the way to about 2000. It was stable to maybe a little bit lower, and then it just takes a nosedive from 2000. Now, overall, you could say it's gone down from 1950 to now, but really the biggest move, more dramatic move, was just 2000 to now. And it's dropped. You might think it's only dropped from 64 to 54%, but that's still sizable enough that is telling us as people were getting pay raises, it simply wasn't as good as pay raise as prior generations, while the companies were making explosive amount of productivity, selling more and more, producing more and more, making more and more profits. They were just giving tiny little pay raises along the way. So I think it's understandable that as a society, is how we think and behave. We're a miserable lot from 2000 to now, and now look at all this political stuff. It's no wonder that people will vote for anyone and everyone, rather they're the devil himself or an angel. They just want something different, something done. And that's where we are today. And that's why we're burning down the government, is basically people have said, this just didn't work. Right? So I think, and increasingly we're seeing, especially more MMTers that believe in the money printing system is actually a good thing that we have. Um, we're basically saying, and I'm on board with them, that from 1980s to now, we need to do away with all that. It's time to change it. Well, in a way, Trump is actually wrecking republicanism and conservatism, but also Democrats. Okay, and I'm starting to think, well, this was ugly, this was nasty, but maybe it was a good thing. I think it's not going to last long, and I don't see a plan from the Trump people where we're really going in the next 20 years. So I'm guessing it's actually going to be someone else, something different. So I think we kind of had to burn the house down in order to shake us all up as saying, something, we got to come together and we got to get something better than what we've seen from Republicans and Democrats. Because the weird thing is, even though they were fighting one another all this time, they were really just following the same path. And that's that story from 1980s to now. And you can just see the economy just was not as good as it was from 1950s to 1980s. Okay. Unless you were the rich person, then you really raked in the big bucks, right? And the middle class, and we got this K economy, and it's ugly. I'm afraid it might get worse, even though I'm bullish the stock market this year. And by the way, the stock market forecast is up this year, down next year, and it could be down a huge amount next year. Um, and if you want more details than that and the signals along the way, become a member, of course, because I'll update you as fast or as slow as you want. And I do have such crazy things as a once a day decade sell signal that might protect us from a 50% drop in the stock market. So I think the stock market is pretty much rigged on this old thinking that as long as the Fed Reserve is printing money, and it is, as long as they're backing off quantitative tightening, which is just another form of also helping with the printing money. They haven't lowered interest rates as much as Trump wants. He wants it down a lot. And people are pretty much betting no matter who he hires and gets into the Fed, they're not going to drop it that much. And that would probably create a disaster later this decade if they did. But they could drop it some. And the way Wall Street's looking at it, if interest rates stay the same or lower, that's a plus along with all this printed money. And then they're asking themselves, well, are companies at least making some money? And the answer is yes. And that is their core formula they've used probably since 1980. That is just an automatic buy, buy, buy. It doesn't matter if it makes any sense. Doesn't matter if the rest of the country's going to hell or not. Okay. Just buy it. Okay. And they're winning. Okay. And I think this is probably going to follow through this year to put it right up some more this year as well. But next year, something's going to hit. You can just see we're heading to some extremes to bring that around. And I don't mean to flip over all the way to the stock market here, but I got some statistics I wanted to throw out. 94% of the years from 1928, the stock market dropped 5% at least once during a year, or at least spread out over 1928. 63% of those years dropped 10%. 26% of those years it dropped 20%. And I like that one because it drops off quickly as it goes all the way down to minus 50%. I can see these performances that's now out there on Wall Street being discussed. I can see they match some of my business cycles. When I get the once a decade sell signal, I'm thinking 20% to 50% down. When I get the once a decade buy signal, I'm thinking up 100 to 400. It's already worked for me. We're up over 100%. Got it. There's people that think this thing's going to the moon all the way to 2029. Well, I can allow to 2029, and then I think some serious problems going to hit. And the higher we go, the more serious the problem, because that's just how it's worked. But I'm wondering about 2027. I can see a 20% pullback, and we'll be okay. And then we're going to right to a record high, rebuild the economy. It's probably just going to be a hiccup in the economy. But I can see that for many years I've forecast a problem 2028 to 2031. I could see where that could strike in 2027. We might be down 30 or 50%. So this is going to be very, very interesting under Trump because so much stuff is coming at us so fast, things we've never seen before, things we've seen in the past that didn't work, but we apparently want to try it again. Those things can go. But I must say, I think there's a chance we might see the economy improve here, even with some inflation and higher interest rates. We could see the economy improve, and we can see the stock market actually do pretty good this year. And Europe's doing very well for me. I'm a little new on forecasting European stocks. I mean, I've done it for years, but I never really put it in my service. Well, now it's in the service. We have a weekly update on just European and foreign stock indexes, and I got some money in Europe, and you can just see these American investors. As soon as there's a little bit of a rocky road there, more so from Trump and economic indicators, they just move a little more money over into Europe. And Europe is so sensitive. They don't have the markets we have. We've built such gigantic markets. Just a little bit of money flowing in there can just knock those European stocks up. Now, someday that'll create a problem for Europe too. And I think Lagarde at the head of the ECB is wondering about that someday too. But right at the moment, I think it's probably a good time for Europe. It's going to pick up its pace and do pretty good with the stock market. And so far, Europe beat the U.S. last year, believe it or not, even though even U.S. did very well, up 19%, 17% for the year, even after that crash earlier in the year. But Europe still beat us, and they may beat us this year. But yeah, I got a feeling we want to watch out for some things that can cause some problems here by 27. And maybe the worst will delay to the end of the decade. I'm just saying I want to play it safe as I get close to that. What else have I got? I think I pretty much ran through the idea that people obviously aren't happy, and we have this K economy, and the rich are happy, but believe it or not, stressed out. And then the lower side of that K is the middle class and poor that are not doing that well. Even if you find them doing well, they're really stressed. They're really concerned about the future. It's fascinating. They're investing in the stock market. They're buying the stock market. They ride out these big dips when professionals in Wall Street don't. They jump out and cause that dip probably. Why are they doing that? I think it's their lonely little bit of hope that they are getting a piece of what the rich are getting. Okay. And other than that, I think they look at the rest of their life saying, they're not getting anywhere and maybe falling backwards. And someday there's got to be a breaking point on that. By the way, Isabella Weber, a famous economist over in Europe, and she's on the new economic things. She's always working on inflation and the gouging of inflation. And are companies really causing that more than the Fed and government? And the answer is yes. But she showed a chart. It's a very complicated chart. Boy, they're getting into some things that I don't quite understand how to calculate. But she showed tracking oil prices of who gets what, when, and where, that 1% of the American population, therefore the very rich, are getting 50% of the oil profits. And the lower 50% of the American population gets 1% of the profits in oil. So I'm sorry, I don't think anybody needs that much profit just to punch a hole in the ground and pump some oil. You can call me socialist or whatever, but I just can't quite agree with that, right? So there has to be some big adjustments. And I think the 2026 election, 28 election, the 2032 election is going to bring some of those adjustments. If by 2034 we have not changed a thing from now, I'm going to get very, very nervous where this country's going on into the 2040s, and we'll be discouraged that it's quite possible we're going to have a lost century when the rest of the world just does better and better and better. I don't think that's going to happen. My best forecast is the American people are going to pull together here soon. I think we got to beat ourselves up more, drop us to our knees, get a bloody nose. And then I think we're going to stand up saying, okay, we've had enough fighting and arguing this. What the heck are we going to do? You know? And
worldwide though, I mean, it seems like there's a lot of this. We're sick of it all. We're not going to take it anymore. Kind of approach to life, whether you're talking about Europe or Asia or
yes,
it seems like everywhere you kind of have the same feeling around the world.
Yeah, I must admit, just a few minutes ago, I put something up on my YouTube private account that I only have a handful of people that I keep forgetting to use it, but right away, a guy did a very intelligent rebuttal of some of my things, and just wanted to point out that I keep saying, well, U.S. is such heading for the toilet or something, but he showed out, around the world, yeah, we have these things that are looking good, but we have these other things not so good. And I've always had this theory the world kind of follows the U.S., and they've been following us also since 1980, building all this stuff. And they're running in some of their own issues as well. And they've printed a lot of money. And that's kind of why some people wonder, why is the dollar not crash for all this printed money? Well, it really can't, because everybody else is printing money. And the dollar, when you look at the value of the dollar, it's not really what it's worth in our country. I say it's worth zero. It's just a mode of transferring stuff around, so it can't have value. But as soon as we use our dollar compared to another country, it becomes an adjuster of their commodity prices, our commodity prices, and doing business. So it does have some value, okay? And the reason it can't drop with all our printed money and government debt is, one, I truly believe our government debt really isn't that big a deal, but I'm an MMTer. The standard economist who might come back at me saying, no, you're wrong. I would then say, yeah, well, so what? Because everybody else is printing that money around the world too. These currencies, they can't get too out of line with one another. And you can't really bring the whole world down. They don't, the currency traders don't know how to really work with that, and they can't bring it up either. So the dollar is not a good tool to tell us whether or not we really have printed too much money. That's why I stay with the idea that, hey, if the dollar index, I think it's at right around 100, isn't it? I can't remember now. In the upper 90s. It gets down to about 65, call me, because then I'll probably be scared that something's wrong. Maybe we did print way too much money. In the meantime, most of this printed money, we can put it to work. It's just a sad thing that less and less goes to the middle class and poor and more to the rich and big business. And that used to work, believe it or not. I was there. I was waving my flag on the Republican side for many years. But today it's not working. I'm sorry. It's just not working. And everything burns out anyways when it comes to economics. Nothing will work forever. But today we have just simply pumped too much money and to the minority of this country and not the majority. And a young person, these really young people, they have a right to be mad. They really do. I used to downplay that kind of stuff, saying, hey, when I was a youngster, I was mad too. But later on, I got to work, I made money, I invested, and you know what? It wasn't so bad after all. But I got to tell you, maybe I'm missing something, but I look at some of these young people and I'm thinking, you know something? You do have it worse than what I had. I'm sorry. That's just the way it is. So what are we going to do about that? Well, we need to fix it, and we're going to fix it. And even though a lot of people will say I'm anti-Trump, but I feel as though maybe he did the right thing of burning this stuff down. But it's the other people, the rest of us, have got to figure this out. And we now have that incentive, if you will, to also get mean tough, get out there and say, okay, we're not doing it really the Trump way. We're going to do it differently, but we aren't going back the way it was. That would be the death knell of the U.S. if we go back. All right. We got to do this differently. And I really appreciate the younger people that, especially those that are willing to get into the politics. I did some analysis here just last night. And I was surprised. There's actually a few people in the silent generation. They must be like 90 years old that are actually still in Congress. I didn't realize that. The baby boomers are getting, of course, old enough to go out. The Gen Xers are just now starting to move in to take power. And it's going to be the Gen Xers first that I hope are going to start turning us out of this. Millennials, I think, are going to do the better job of actually turning us around. And then the Gen Zers probably won't be empowered to almost about 20 years ago, or 20 years from now. They'll probably put the final touch of whatever it is we're going to do in the next 20 years. And so I'm really excited what we do in the 20 years. I'm optimistic, but I got to tell you, if we're not careful, we can really screw this up. And I really am concerned this burning down stuff right now, it's not the answer. We got to do... to me, the whole Trump people don't have the answer for us. But I can also tell you, I haven't seen it from the Democrats. I got a few people I really like inside of that to have some ideas. And my personal ideas, hey, get Medicare for all. Even the Republican millionaire billionaires, they know it'll cut costs for business. They know it'll cut costs for the people. And then universities have also done studies saying it also saves people's lives as well as cut the cost. Why the heck aren't we doing it? They all know it. That nobody seems to really push it, And then do something on the minimum wage side, which if businesses are worried about raising it too fast, we can just print the money, believe it or not, and send that as a basic income. And then frankly, I'm ready to write checks for people to put in their retirement accounts. As far as I'm concerned, if you're 20 years old, put $500,000 right into your account right here, right now, okay? Start putting money in for the babies at much smaller, scale them in, and start making money out of that stock market. and save Social Security. There's no reason to. I think you could actually lower the tax rate, Social Security, make the rich pay their share. Have the government come out saying we will back it. If the economy's that bad and the rich can't pay it, nobody else can pay it, we're going to put the money. The Social Security will be there, and for the Social Security should be low interest and safe. By idea of putting money into retirement accounts, I want you to put that in there and have some risk, make some capital gain, take some capital risk. You put those two together, that's your portfolio. Any financial planner normally has some cash, and then they have their stock and bond investments. So that's the portfolio. And, it's just sad. We can print a lot more money than what we think right now. And this debt thing isn't quite the issue on the government side. We could be living so much better. And no, I know it's the American way that we have to work hard. We're kind of Puritan based. We have to work, take the hard road is what we are determined to do. And I'm not saying we become so easy that it's a lazy way of doing it. I'm not saying that at all. And some of these things I'm talking about, it's already been proven in other countries. People didn't turn lazier. They became even more creative, more productive. They were even more happy to work. They liked their country better. They liked themselves better. We need to talk more of this and build these kind of things. And we're not there yet. Things may have to get worse before better. But if we do these things I'm talking about, it will change our attitude. We'll live longer, be happier, we'll get along better, and we'll build business and have a better economy. And it's there. Now, when I said I'm less nervous of government debt, I am nervous of the private debt. And that's going to be the thing that's going to blow up on us again in the next few years. And I don't like all these bankers investing so much money in the stock market. I think they're kind of pushing things harder than people would normally do. And I think they're going to be irrational as well. I don't like all this AI trading. I think that's just going to act like an irrational trader anyways. So let's stay in touch. I'm trying to be an optimist for 2026, but let's stay in touch because yes, crap's going to hit the fan. Once again, it does it every decade, Casey. And you could just see it's coming, but I think we can make a buck here first yet along the way here.
Right on. Okay. All right, Rich, good place to stop. If folks want to reach out to you one more time with your podcast, the best way to find that and how to reach out to you.
Yep, go to criticalpointpod.com, 60-day free trial. Okay, and there's free stuff there too, newsletter, and I got some videos. I'm even coming up with a new type of video with a different name. But also email me, tell me I'm wrong. But hopefully you'll include some facts like that person just a few minutes ago. They really gave me some statistics to think about, okay? So you can email me at criticalpointpod@gmail.com.
Right on. Rich, appreciate you being the podcast. We'll catch you again next time.
Thank you very much.
All right, stay tuned for more Moving Iron podcast after these minutes.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast Markets. I got Chip Nellinger with Blue Reef Agri Marketing on to talk about what's happening in the market. Chip, how you doing today?
Hey, doing well, Casey. How you doing?
Yeah, I'm doing pretty good. We got a little bit in the news right now. It's kind of driving the markets a little bit. We finally got some outside market influence. For the longest time, corn's just been kind of slopping back and forth with that amazing help we got from the USDA a couple weeks ago. But as you watch how things are moving along, as you look at the corn market right now, it's not as stagnant as it was. You see some volatility popping in, but it feels a lot more like outside money's coming in the marketplace. Your thoughts on that?
Yeah, obviously the USDA report a couple weeks back was bearish, obviously, after the market reaction, but really within 24 hours, we had that digested and into the market. And now it's more about, some uncertainty in the outside markets, in my opinion. We've had a lot going on. We have this Venezuela situation. So how's that going to affect crude oil? Hasn't seemed to affect it a whole lot yet. We still have a lot of, internal kind of strife happening in Iran. Will we go in there or, affect some regime change? That obviously could affect the crude oil and energy markets. And now we've got this Greenland situation with President Trump threatening some European tariffs. That more than anything probably has seemed in the last 48 hours to kind of get the outside markets. We had a big move in interest rates. There's some rumors of kind of an anti-U.S. type sentiment out there, and some big investment, whether that's a sovereign nation or a big fund dumping U.S. treasuries. We've had a huge move lower in the dollar. Is that going to maybe flame some inflation? There's a lot going on out there, just, on top of obviously this bearish USDA report from a couple weeks ago. And, you throw that into the boiling pot here, and it makes things really interesting, because it's not sometimes, as you know, just about the fundamentals of the grain markets here. We're knocking on the door of a massive harvest in Brazil. Beans have stabilized and now bouncing a little bit. So, there's some things going on out there that really, if you're just a pure fundamentalist, you're scratching your head wondering, why are beans staying here with a 10 in front of them, and, closer to 11 than 10 right now? Doesn't make sense with a record Brazilian crop, because of all these outside market influences, bubbling under the surface right now.
Yeah. Yeah. And it is, like you said, a lot of moving parts. This Greenland thing, which I thought was a joke when he first said it, but, during the election thing is getting hotter and hotter, and there's more and more, I think people realize that maybe it's not as much of a joke as he thought it was going to be. And, so it's going to drive some stuff. I mean, just as you look at European U.S. relations and tariffs and this, that, and the other thing, it's going to drive the market into some different territory than we're probably have seen it. I mean, just something we've not seen before.
For sure. And then I kind of forgot to mention here, right? We've got a fairly important Supreme Court decision that's kind of on tap here about the, legality or constitutionality of the tariffs. So that could have a massive impact on the financial markets, and obviously our grain and livestock markets, one way or the other, depending on that decision. And, it's kind of overdue at this point. We're going on about 10 days ago. You heard the whispers of it's going to come out today, it's going to come out tomorrow. That's a Supreme Court, so they can come out when they want to come out, but that is on tap and could be a massive influence in our markets, depending on what the Supreme Court decision is.
Yeah, it's going to be crazy. Oh, well, it's been a crazy 4 or 5 years anyway. Why not make it 5 or 6, right? So watch this thing rely. Let's talk a little bit about what's going on with the drought monitor. I'm going to show this here real quick so people can see where it's at. I haven't seen it, but if you look at where the drought situation is at, and I mean, granted, it's still early in the year, right? And there's nothing, no one's planting anything yet. I mean, I guess some extreme south stuff, but if this persists, right? I'm where I live at out here. We have such a need for water coming out of the mountains that there's just nothing there right now. There's no mountain snow in the mountains to speak of. I mean, the ski areas have limited runs open. If you look where Iowa, Illinois, Missouri, where they're at as far as extreme drought goes, as it sits right now, there's more, extreme drought to drought situations than there is anywhere else, and that situation is absolutely setting itself up to where if we don't start seeing some moisture here pretty quick, it's going to get harder and harder to get out of this hole before planting season starts. So I guess, Chip, as you're watching this drought monitor, what are your thoughts as you look at this as we head into that March plains cycle?
Yeah, it's actually very interesting. Just jokingly, I personally always have a bias against talking about weather or drought in the winter. Like I just despise it. But you pop that drought map up, it is a real deal. We did a little insert. I want to qualify this by saying I am not a meteorologist. It is not my arena at all. But we did a little bit of research. If you look at that drought map, compare it to different years, they also publish a percentage of like the Corn Belt area, growing area that's in drought. Think right now we're like in the right around 30%. There's actually been a few years in recent history that it's been worse than that at this point on the calendar. But here's the key to that. If you kind of look at the seasonalities, if you want to call it that, of this drought map, from about right now till the end of March, Usually, obviously you get some some winter snowfall, and then you start getting spring rains, and that percent of growing area that's in drought shrinks by the time we get to late spring. So I think we're into a window here that is really important, and if we don't start getting some snowfall and some spring rains here, into February, first half or first part of March, we have an uphill battle with that. It doesn't mean we can't still raise a good crop, but we have a real uphill battle because as you come in, if we're sitting like that on April 1st, it is almost impossible to catch that up. You don't change those that long-term drought situation, with one or two rainfalls. Now, again, that's what the market's going to have to grapple with is fast forward to, maybe March 15th, April 1st. What's that drought map look compared to what it looks like today? If there's no change or it gets worse, probably going to start adding some risk premium, but it still doesn't mean that we can't raise a crop. We've proven that last year, right? In some dry areas, if you just get the right 2 or 3 rains throughout the growing season with the right timing, you can still raise a crop, but it makes it way harder because if you start missing those rains, there's nothing in the bank as far as subsoil moisture goes. So I've changed my tune a little bit. Usually I would have just, if you asked me about the drought map, Casey, 5 years ago, I would have walked out and just shut the camera off. But it is very important this year. And after that little research that we did, that I kind of look at that on the line graph, it really is telling to me that the next 75 days, 90 days, really, really important. Do we improve that? Do we get it worse? That's going to set the stage for the U.S. growing season, and it's really going to have a major impact, obviously.
Yeah, it's again, like you said, it's still early. There's lots of time, but man, I have this feeling that it's not uncommon for us to have we've got winter, then we have April, then we have spring. So April could be as devastating of a winter as any other month out there. And I've watched this since I've lived out here to where it's kind of, it's been a nice winter, nothing crazy happened. You get to winter, you have like 2 100-year drought or blizzards, and it's just crazy, and you kind of puts you back on top, and so like you said, it's hard to kind of put a lot of stock in this right now, but when you're waiting on to all your moisture to come in late in the year, it's kind of gets you a little worried a little bit. So
yeah, it's you need it at the right time, right? Like if it all comes at once and runs off, it's not doing you a whole lot of good. You need nice regular rainfall, and it's widespread, like you mentioned. It's not just the Corn Belt. It's expanding to the southwest. It's southeast. This past long weekend here, over the MLK holiday, was out in the Denver area. My son lives out there. We saw some friends out there. And I don't get out there a lot, but you look out into the mountains, there's hardly any snow up there. And, obviously the plane ride out there, people are lamenting the fact because they're going out there to ski. I don't even know if I'm gonna be able to ski. It's just strange. So that's an effect too. Obviously, there's a lot of irrigation out there. Those mountain, that mountain thaw in the spring is crucial for refilling those aquifers and drinking water and irrigation. And so it is a big deal, and it's something that even this early on, unfortunately, we need to really monitor that over the next couple 2-3 months here.
Yep, for sure. I'm going to something to pay close attention to, and like you said, it's a long ways to go. We got a lot of things ahead of us here, but it's time. It's time. It's time to get some water, and we'll see what happens. Sure. So hopefully, knock on wood. Like we got this record cold coming through right now, and going into some areas that are not necessarily equipped for record cold. And record cold is a relative term, right? But it's in certain areas, record cold is when it gets to 0 or below in Texas, for example, that's not cool, and it changes some dynamics there. So as you're looking at some of the energy markets right now, Chip, what are you seeing?
Yeah, well, I mean, just recently, with this storm that's coming through, it's and they're harder to predict. It seems like, right? All the technology and billions of dollars we've thrown in these weather models and AI. There's a weather model now that relies on AI. And Mother Nature says, you cannot predict Mother Nature, and it boggles my mind how it's so volatile, trying to forecast these storms. So it's changed the path from initially. It was supposed to be way up north, and now it's kind of hitting the mid south. A lot of ice, a bunch of snow. The natural gas market this past weekend pretty much went in on almost contract lows, and then 48 hours later they're like, you've had a massive, I don't know what natural gas is up, I think it was up 17% in one day earlier this week. It's up sharply overnight as we're recording this, so it's up 20 some percent in a matter of 2 days in the natural gas market. So obviously, it's kind of, along with what we were talking about on the drought, these storms, especially winter storms, are hard for the meteorologists to predict. But there's a pretty massive influence there, and part of it is too that it's far enough south that they're saying it could affect, kind of the grid. It's so cold, it's going to be hard to get the natural gas where it needs to go to heat homes and businesses. So it's wide ranging. It's not, like you mentioned, we tease the Southerners a little bit, right? I mean, if it's, it's going to be 7 or 10 below here in Illinois, it usually doesn't affect things in a bad way. But down there, different plumbing, different everything, different energy grid. And you get 10, 15, 20 below down there, it's critical situation. So it's nothing to joke about, and it's going to be a 2-3 day event that really, hopefully they get through it, without much damage or a big strain on the energy grid down there. So it's just crazy, just go to show you, Mother Nature is gonna win in the end, whether we're talking about moisture, crop size, energy usage, and it's created a huge amount of volatility. The crude oil market seems like it's just kind of sitting there. It's rallied off the lows a little bit. Obviously, it's a little less affected by these storms than the natural gas market. But then you've got this whole Iran situation bubbling. I'm not. I'm just an armchair quarterback here, looking at it from 50,000 feet. Probably sooner rather than later, something's going to flare up in Iran. Whether we intervene, the United States, whether there's some sort of an internal, overthrow of government. There's a lot of protests out there, and that definitely affects, the crude oil market. So that's bubbling under the surface as well. That's obviously not weather related. So these outside markets really could have more of an impact, say over the next 60 days than grain fundamentals. We kind of know the crop in Brazil. It's big. It's record. Whether that ends up being 175 or 185, it's a record crop in Brazil. We kind of know that it's digested in the market. We know our crop size, right? We had the January crop report. We're not going to raise a crop here for, several more months. So now the markets, at least in the grain perspective, is sitting out there saying, well, what's the dollar going to do? What are their energy markets going to do? And crude oil, what's the dollar going to do? It affects things as much as fundamentals right now, because for the most part, the fundamentals are known at this point in both hemispheres at this very second.
Yeah. Well, it kind of shows you a little bit too how much actual oil is on the marketplace. You have all of this geopolitical stuff that's going on right now. Typically, when you see geopolitical stuff even start to mention stuff, the oil market just shoots up, and it's had a hard time coming off the bottom at all. I mean, it's just so it just kind of lets you know how much physical oil is actually out there that they have to work through, and it's definitely calming things down. I mean, from an economy standpoint. So, well, just where the economy's at and prices and quote unquote recessions and everything else that are going on around the world, it just shows you that there's a ton of oil out there on the market that needs to get worked through before we start seeing a huge run up in prices.
Yeah, and obviously you start talking about the Middle East, and not to get too political, no matter who's controlling a particular country or how harsh the regime is, the flow of oil, the production of oil in the Middle East is a powder keg, and not just Iran, but the whole area, right? And obviously we produce a lot. And I read a story on this the other day. It's certainly not an energy market expert, but we're so efficient. A lot of our production comes from the efficiency. It's not like we're producing, a ton more, but we're very efficient in the way we are producing it. And, obviously people like sub $3 a gasoline, but
I love it. That's great.
Always one eye to Iran, because all of a sudden that could be $4 and, a powder keg goes up and it just, unfortunately, you hate to see the protesters being killed by the current regime in Iran, and you hear about large numbers, and freedom always wins. I like to think, but you can just kind of feel that something's about to give in that part of the country, or that part of the world, and that country in particular. So that'll have definite effects both ways potentially in the energy production.
For sure. All right, Chip, good place to stop. Folks want to reach out to you, get more information on what you're doing over at Blue Reef. What's the best way to do that?
Yeah, best way is just call our main office here in Morton, Illinois. It's 309-550-7213. For a little more information, we've got a fairly new website. It's www.bluereef.ag, and they'll tell a little more about what we do, but feel free to reach out. Love to chat with you.
Sounds good. Chip, appreciate you being on the podcast. We'll catch you again next time.
All right. Thanks, Casey.
All right. Stay tuned for more Moving Iron podcast after these. All right. Welcome back to Moving Iron podcast. Got Aaron Fennell back on. Talk about what's happening in the marketplace. Aaron, how you doing this morning?
Pretty terrific, my man. Pretty terrific. Indiana University.
I know, man. I'll tell you what.
Football national champions.
They're the only team that were ranked number one all season long for most of the season, and had first round bye and just dominated everyone they played, but yet were underdogs in every single game they played all the way through the national championship.
Till the end.
Yeah. I was watching that game last night, and I was talking to a friend of mine, and I was like, this is the first time I've ever watched a national championship game where the two teams that are playing for the national title, only one of them has any kind of a history or any kind of a pedigree when it comes to playing in games like this, and the height of program and those kind of things. And then Indiana's highlights were this season. You know what I mean? So that was like, it was cool to watch that, and you could see. My takeaway from last night's game from the media perspective was we really need to have the U to win this game, because that is going to carry us through until the next college football season starts, right? And now that Indiana's won, they're going to play the Cinderella story that is, and now we have a chance to jump on them at any given chance, anytime they have any kind of a hiccup whatsoever, because now like, oh well, they just couldn't sustain that run, and Cinderella's, truck 12 and all that crap. You'll hear all that kind of stuff. So.
But here's the thing: anything the U has to talk about has the same color as our facial hair. It's old and gray, man.
Last time they were relevant.
The U, the people that are fans of the U, they hang out with the Nebraska fans, and they like to sit there. 30 years ago, we were the best thing ever.
Yeah. And then
you were 30 years ago.
They had they'll be back though. They're going to have this.
I truly think he is the guy who has that portal thing the most figured out start to finish.
Oh, 100%. And it's going to be interesting to see when you got guys like Mark Cuban and 15 other guys like Mark Cuban that all are alumni. I knew Indiana had a good business school, but I had no idea that they had the pedigree of people coming out of that business school that they have. So there's going to be
here's what I know about Indiana. I know Bobby Knight wore plaid blazers and kicked a chair across the court, and that's what I know. Do that.
It's going to be. So you take a guy like Signetti, who's going to go out there in the portal with a bunch of cash, and
hey. How funny is that? What is it? 2 years and 3 months later, from
Yeah.
Google me, I win. Yeah, you do.
You do. You really do.
He's only lost twice.
I know. Yeah. And that's the thing about where we're at with college football now in the portal and what you look at there. And so, some people will say, hey, you know what, this has ruined college football. And I waver back and forth on that. But I'm of the opinion that now you have a limiter, like you have a leveling degree of leveling out there in the marketplace, right? So you have this, like, a Vanderbilt, which was very much just a school that smart kids went to in the South, to they are a contender. You know what I mean? Like they got shot.
Almost made the playoff.
Yeah. So, I mean, it's like one of those things, like you start looking at those kind of things and how those things work. It changes the landscape of stuff. But I also will say this. You give a guy like Signetti a big wad of cash, and he's just got doing, like, his teams remind me a lot of like what Belichick was doing at the Patriots, where they just had guys that would just come in that you did what with who? Like, who's this kid? And then he comes in and, oh wow, look at that, he shines because he's a perfect fit for that place in the cog.
Yes, he was nothing at his other team.
Right.
He's amazing as a Patriot, so he gets a big contract, goes somewhere else. Every one of those guys sucks at the next place. Because they're not in Belichick's system doing that exact, these 4 steps every game. Like, he's got stuff that figured out.
Yeah. Yeah. And I think that's what, Signetti's doing a lot of that too. And Saban did a lot of that kind of stuff too, but Saban had, like, every 5-star that was a specialty.
Breaking down his door to come there. Yeah.
So I think that's really what it dialed into. So it's going to be interesting to watch what happens at Indiana
we have utility players. This guy's a 5-star drop back passer. This guy's a 5-star option quarterback. This guy's a 5-star spread quarterback.
Yeah. So
tough day, huh, Nick?
It'll be interesting to watch too. Another thing too,
I think the portal is less of a problem. I think the pay-in is the problem. Guys aren't leaving. They're not leaving college, dude. Dante Moore, Oregon's quarterback, going to be the top pick, going back to school. And not to get better. Don't give me that. He's going to take a pay cut being the top draft pick.
Yeah, which, I mean, so the NFL is going to have to start taking a look at look at Indiana's team. The average age is like 23.
Yeah.
So that's like most, like, I can't remember who it was. There was an NFL team out there that their average age was like 25.
Yeah. It's like it's within 12 months or something. It was like the Vikings or something like that.
Yeah.
But
I was like, oh wow.
I think Signetti figured out the secret. Go ahead and go in the portal, but get all these guys. This is their last chance.
Right.
That's who you want. Go get them. But it takes Kurt to do it.
Right.
You're not going to have Jerry Glanville go in there and, hey man, let's go do this, buddy. No.
Yeah.
Kurt Signetti goes in there with his quarter zip and no undershirt.
Right.
Do you want to win a national championship? Yeah. Come with me.
What do you say? Let's go crack a couple beers and talk about this. What do you think?
There you go. But he did say after he said that at the Rose Bowl that next week, he goes, only a couple. I'm old. I can't get carried away.
It's interesting to watch how that works. And again, it's going to be, here you have like the Ohio States and the Texases and those kind of places like that of the world that have these huge $20, $30, $40 million payrolls. And here's a guy that just showed up. Yeah. Here's a guy that just showed up and did pretty good. 16-0, man. That's pretty impressive. It's going to be one of those things too, when they win the next 10 games in a row and they're 26-0 and the whole thing that goes on.
Oh yeah.
You know what I mean?
They lose in double overtime to Northwestern next year. And it's a big deal.
Right. Yeah. Exactly.
For sure.
Exactly. So, Well, let's talk a little bit about the tractors going out in the world. So we've been talking back and forth about this.
Speaking of Indiana and corn,
you and I talked quite a bit off air together, and we were back and forth. And this, I think we need to spend a little time talking about that 6 to 10 year old market. You know, we've kind of laid out what was going on the 3 to 5 stuff. That 6 to 10 year old market is really going to continue to be a driving factor in what's out there. And the reason for that is the biggest limiting factor about the 6 to 10 year old stuff. It's not so much machine condition, those kind of things. You start running into just kind of the very top end of the funnel, the bottom end of the funnel. You start those customers that are out there that want to buy a 7,000, 8,000, 9,000, 10,000 hour tractor, opens up the door to some international stuff and those kind of things. But I think the thing about this that we should probably cover a little bit is, if you've got one of those tractors and you're thinking about upgrading to the next, to a 5,000 hour something or whatever your next hour segment down is, what's that look like and how do you go through that? And I think for me, when I would go through that, I think this is that time and place when you start talking about the machine that you've got and being very thorough in how you explain the condition of that machine.
Yeah, for sure. The 6 to 10 market right now is, and I mean, obviously we're using a big net, a big funnel, whatever, to catch that group, because that group is what is feeding almost all trades, almost
right.
all. Your 3 to 5 buyer has a 6 to 10. Your 1 to 3 buyer, a lot of them guys have a 6 to 10, not a 3 to 5.
Right.
So, because they bought a 3 to 5 when it was a 1 to 2.
Right.
So now they're getting their next 1 to 2, and they're trading as a 6 to 10. And it's I don't want to say rapidly growing market, because we're not in a rapidly paced market, but it's a growing segment that on the dealer side, you really have to pay attention to. Another thing, just because of what it is, it's also, as we talk in our boxes, our shelves, whatever, it's a really big group. So you can have a 6-year-old 5,000 hour tractor and a 10-year-old 9,500 hour tractor.
Right.
That's in the same hopper. Those are way different tractors, but they're in the same hopper because that's where they're going. You know what I mean?
Yeah.
So that in and of itself, the fact that that segment is so wide, so spread apart, creates its own challenges in it to keep that stuff moving. Right? So yet, and it is, that product segment in my mind has 2 temperatures: Antarctica and the surface of the sun.
Right.
Like that's where they play. Either and it never fails, you have a run at the late model stuff, you get a pile of that in, about when you start going, ooh, what are we gonna do with this? It's like trickle, 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 and you're like, oh, it's working. Look at things flowing. So as an owner or seller of that item, I think it's more important to, that's where trying to think of the right word here. That's where the pedigree of that machine with you as private party seller, owner seller, is enormous.
Yeah.
Yes, it helps on the 20-year-old stuff. Yes, it helps on 30-year-old stuff, like is so often talked about. But that 6 to 10, because in that 6 to 10 realm also, you have dealer, wholesaler, private party, whatever, auction. There is very, very little variance across those 3 markets in that segment.
Yeah.
If you're the guy selling, because pick a tractor. Okay, everybody's asking 160. I'm pretty sure I can get it bought for 150. So I don't want to trade mine for 140.
Right.
I want the 150. Great. Sell it.
Yeah.
And that's where every little shop ticket, every little, we did this, we did this, we did this. That's where that, the notebook, whether it's a printed off the ops center or whatever it is, that's where the history of that machine is so vital, because everybody's trying to differentiate.
Yeah. Yep. And I think if you look at how those machines play out with each other, when you're looking at the way things roll through, you made a great point about the fluctuation in price it's narrow, right? It's not like a 1-year-old or 2-year-old something where if you buy it at auction, you're going to get a 40% discount.
Right.
It's not like that. It's if it's selling for 150 on Big Iron or 150 at Steffes or wherever it's selling at, if the wholesale guy, he wants to buy it at 150 so he can sell it for 165, right? And then there's a so on and so forth down the line. I mean, as you start looking your way through that, ultimately at the end of the day, the buying public for that particular piece of equipment, not saying that they don't have trade-ins for those, because they do have trade-ins that they're going to have coming in there, but the ability for you to move that piece of equipment is significantly faster than a 1 or 2 or 3-year-old something, because of the number of people that want to buy it. Well, and also the options for which you have to sell it. All that stuff makes a huge difference when you're looking at how those things play out in the marketplace, and to the extent of which they show how condition plays a role in that. I mean, I will straight up tell you guys, if you're looking at a piece of equipment and it could be so chalky, the paint, that you could write your name in it, but the tires on it are amazing, you'd be amazed how many people overlook the paint because the tires are so spectacular, right?
Well,
now flip that around the other way around. It's glossy, nice paint, looks like it just got repainted, and the tires look like they're going to go to the drag strip with them. Those things are going that it blows it out of the water. So those little things like that make such a huge difference in just the overall value of the machine, and also it makes a big difference in who wants to buy that machine.
Oh, for sure, for
Okay.
sure. Now, you know, with more modern tractors, there's more to repainting a tractor. But
Right.
you know, you take a mechanical front. Let's take a mechanical front 4955, okay, with 46-inch rubber, but all 6 tires are bare. They're shot. Tractor's rock solid. Okay, that's like an $18,000 problem looking you right in the face. So that's why it's a big thing. I can get the damn tractor repainted for half of that.
Yeah, I know.
Tires are expensive. And we all know what market tires are everything. 4-wheel drives.
Oh, yeah.
And that's because that's half that you get these old. You get, you know, like a 9400, 9200, older than that for sure. Tires are half the value of the tractor.
Oh, am I going to rebuild the engine, or am I going to put tires on it?
Yeah.
You know what I mean? Like that's a conversation you could have.
Exactly.
You know? And all that makes such a huge difference in that, because even if you buy used tires, like, you know, you go to Axon, or you go to Dawson, or you go to wherever, and you're looking at, how all these tire situations play in. Brand new set of tires is on a 4-wheel drive, what, 50 grand, 30 grand, something like that.
Yeah,
it's a big number.
Yeah,
it's a big number. And then you go and price out just the used ones, and they're, you know, 25,000. You know what I mean?
Right.
So it's just like, it's a big number, right? And that big number completely changes the outlook of that machine. And if you're buying that machine, you're going to take that in consideration when you buy it. Like, you know, everybody's got 50% rubber until you go measure it, and then and then it's you know, maybe not quite 50%. be a little shy. But I mean, it is what it is when you look at that. And again, it's one of those things that you need to stay on top of so you can functionally see where things are headed. But at the end of the day, what you really are trying to focus on more than anything is I'm buying a high-hour machine. There's inherent risks that comes with that.
Yep.
How can I limit my risk as much as possible? And that is the mechanical functions of the machine. No one's buying a 10,000-hour tractor or a 7,000-hour tractor that doesn't expect to have some level of thing. And I look at it from the perspective of, this is on the ag side of the business comparatively to what happens on the construction side of the business. Construction side of the business, oil samples are a commonplace thing, right? No one exactly. You can go look at any machine for the most part. From the time it had its first oil change to where it's at on the inspection day, there's a list of stuff that shows the quality of the machine. On the ag side, the problem with that is you get maybe an oil sample at the first time the oil got changed when going through breakthrough oil, and then somewhere down the line when it's got 7,000 hours on it, you get another oil sample and like, oh, this thing's a pile of crap. Well, it's also got what you would expect for the level of contaminants in the oil for the hours associated with the machine.
Right.
And that's the other side of it too. Now, I'm not saying that you should have a bunch of lead and zinc and all this stuff in your oil, because no, you shouldn't. But there's some level of that you're going to have. That's an expectation, right? And work your way through that. And
that's why the word they use is tolerances.
Right, exactly. So if you're kind of watching those things, where you at in the tolerance level, that all that stuff matters. But ultimately, at the end of the day, the beautiful thing about the tractors like this is that these older tractors have a lot of life in them, and they have a lot of good working time on them. And the nice thing about tractors like this too is that whatever you bought them for, more than likely you end up selling them for when you go.
Yeah.
At the end of the time,
That's
that value just kind of it's a static number for the most part for perpetuity. If you bought something for $100,000, probably 5 years from now you're going to sell it for $100,000. That's going to be and it's just that number kind of stays the same across time. So I go back and look at when a 50 series tractor hit about $40,000, they're still worth $40,000 today, and that was 10 years ago.
Right.
You know what I mean? So like that number still stays the same as you walk your way through it.
My crown jewel, 4455.
Yeah.
They don't go down.
No. They just kind of stay there. And
sooner or later you hit 0 hours again, and then you start over. All of a sudden mine went back up to 80,000 because has 100 hours on it. But no, seriously, to your point, I have had guys do this. You buy an 8R whatever with over 5,000 hours. Rubber is what it is. You run that rubber till it's absolutely black and round. Put new tires on it. Run it 3-4 years. Sell it for more than you paid for it. Yeah, but I put tires on it. That's all it cost you. Yeah. There's a lot of instances like that. Well, we had to put a hydro in the IVT. Well, and that's not cheap, right? But that's what that tractor cost you. You got your money back out of it because you were able to sell it with, it had a new hydro on the IVT at 8,000 hours.
That's a good something we should probably talk about here real quick. Because I had a guy call me about this, and he had a new combine, or had a combine, and I can't remember how many hours on it. I want to say it had 2,000 some odd hours on the engine and 1,700 some odd hours on the separator. I don't remember the exact numbers, but he's like, man, I had the engine failed in it, so I put a new engine in. I'm going to advertise it with 0 engine hours and 1,700 separator hours or whatever that was. I'm like, no, you shouldn't do that. And the reason for that is the first thing, if I'm going through the thing, I'm like, why does it have 0 hours on it? Right? I mean, the first thing you're going to assume is that the engine, put a new engine in it, but it's the It's the aesthetics that go along with it. All these red flags, all of a sudden, are going up, right? What I told him to do was, that's the situation that you're in.
The final drives don't have 0 hours. The hydro don't
Yeah,
have 0 hours.
exactly. And what I said is like, that's exactly what I told him. Like, the rest of the machine doesn't have 0 hours on it. What you need to do is say, hey, the machine had 2,000 whatever hours on it, and then in big bold black letters, brand new engine with
for $80,000.
Yeah, and you like really hype up that engine that you're putting in there, because again, that paints that picture of, hey, am I going to get my 80 grand back? No, but you're going to get 40 grand back or 30 grand back, right, that you need to make sure that you have. So if you're stacking yours up against other $225,000 somethings out there, right? I can afford to ask $235 for mine because I've got a new engine, right? And those, now you're not going to be able to ask $270,000 for it, but you're going to be able to get more for your machine as long as you spell out what you have and really, really detailed orientedly say, put a new engine in it. It's got 0 hours on the engine, have not ran it through a field yet. It's got a 2-year warranty on it. And, here's the other things that we've done with it as well. So on and so forth. The engine failed because of blah, like really explain what happened and really, really draw that out. That's the difference in what you have. And one more thing too, like on the previous thing we're talking about, my rule of thumb is in tractors. Now this isn't right. You don't get the same effect in combines. You don't get the same effect in anything else. But on tractors, once they get back to from the depreciation scale, once they get back to their original price, whatever it came from the factory at, which this will be fun to test this theory as things go on. But once they get to their original price, if you go back and look at like where what a 50 series tractor sold for, if you go back and look at what a 40 series tractor sold for brand new, 55, 60 series tractor, all that stuff when they sold brand new. Once you get to that number on the depreciation scale from what it is, and it works its way back down, that's kind of where it stays, right? Like if you, like one of the things, like you buy a 4440 today, and I've had so many conversations with guys over the years that, well, that's what it costs brand new. It's got 8,000 hours on it. Like you have that conversation with guys. Now, I highly doubt that an 8R370 that's 25 years old from now is worth 650 grand. I doubt that happens, but I sure hope it doesn't happen. But with those older tractors like that are 20, 30-year-old somethings that in today's marketplace, kind of when they get back to what they sold for new, comparatively to what everything else is around it, it doesn't seem like it's that big of a deal. And we see some of that stuff roll its way through.
Oh yeah, for sure. It would be, the difference is, if you could evaluate an 8,000 series based off the metal and not the electronics side of it, like how much did this portion retain its newness,
right,
back to new price? Because that's the thing with a 40 and 50. That's all they are. Right. It's just a mechanical tractor. Your electronics is your blower, fan, and radio, man. I mean, you could put the thing on blocks and drive it 20 years later. Might have a dry seal here and there, but you can't do that with a rocket ship because nothing might work.
Right. Yeah. Very true.
So that's the biggest thing. We're just in a world where everything has tried its hardest to outpace those machines so much. That's why 86 series binders, 88s, right? The 70s Massey's, 70s Case, all that stuff is so easy to go, oh yeah, get one, and we paid 20 grand and everything works, and well, there's only so much to go wrong. You know what I mean?
Yeah.
Those rigs, because they're not the little 4-banger from the 60s with no cab, they're 100 to 200 horse and cab heat, air, all that keeps them alive forever compared to the run-of-the-mill machines we're now using.
Right. 100%. Yep. So long story short, kind of my final takeaway on this, and then is whatever you have that's there. It's going to be, you're going to be able to sell it, and you should be able to bring, as long as it's in really good, it's in good condition, and it's what you would expect to see for that year, make and model of the machine and hours and those kind of things. And again, go back to the hour thing and make sure, or the tire thing, making sure that they're in good shape. Those things all will really help you sell that piece of equipment. And there's going to be plenty of people out there. There's going to be multiple avenues for you to go sell that piece of equipment. Whereas you're limited on the top side of the year range, where if you're towards the bottom side of the year range, you have so many more options out there to pay that'll help you get ready for the coming season. So my thing is, reach out to an auction rep, to your dealer rep, whoever it is that you're working with, and really walk through those options and see what you got. That's my final take on this.
That I would completely agree with that. See, in that segment, you probably have more options than any other segment, because you have more possible buyers than any other segment.
Yep.
Everybody except every single thing on the farm is new every year multi-unit roll guy has a home for that. The guy who has a fleet of 2-year-old stuff, I have sold him many a 6 to 10, 5 to 9,000 hour tractor as an extra. We got in a pinch. We need an extra tractor. We streamlined too much. Now we need that extra rig. All the way down to, this is our first 8,000 series.
Yeah.
That is a big range, and they're all there for the taking.
Yep. Everything from the hobbyist all the way through the full-scale, full-time production farmer. You know what I mean? It's like, you've got all those things in the range there. And how many guys do we talk to that, well, I'm buying this tractor, I got a little farm on the weekends that I go do whatever on, and I've got 200 acres of whatever. And then you got the guy that's got, a little more in depth, but also has the job in town thing. And then you got the full-time. So you've got all of the spectrum that's very, very big, very broad, and very deep of people that you can sell to. Right. So right on. Good place to stop, Aaron. Folks want to get some of your High Plains wholesale deals. What's the best way to do that?
Well, you can catch High Plains wholesale video specials on our Facebook page and our TikTok. You can catch the same videos and other specials on my Twitter or X account at Aaron Fintel, or call me or text me, as you guys do, 308-760-1193.
Right on. Casey Seymour, you can find me on Facebook, X, Instagram, TikTok, LinkedIn, all over the place, wherever you can find podcasts and social media stuff. You can also go to the AgWeb page, and you can check out the podcast there, where you can listen to this edition of this. Also, anywhere else that you find podcasts are all there as well. And you can also go over to the Farm Journal YouTube channel if you want to watch this as well. I want to say thanks to Greg Machinery, Pete Peterson. I want to say thanks to Rich Posson, Chip Nelliger, and Aaron Fennell for being on this edition of the Moving Iron Podcast. So until next time, let's go move some iron, folks. Out.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.